As we continue looking at the purchases process, we want to start thinking about the steps that take place. So here we go, purchases process. The first thing that takes place is, well, we've got the purchasing organization or the buyers of a company, and we'll look at our example company here. Research, pricing, and availability. The products or services we're interested in. This can be an extensive process depending on the cost of the goods that we're looking at. For a major manufacturer, there may be a lot of different suppliers that want to get the contract, or you may have a mix, a blend of suppliers to meet your various needs at maybe different facilities, or just to make sure that you're not overly dependent on one supplier. Next, we want to start selecting which vendors and prioritizing vendors we want to use. So we'll select best price and availability. And we'll have some kind of a formula or set of considerations. We'll call it a formula for lack of anything better. And we'll use that formula to determine which vendor we want to place a purchase order from. And this could be different sets of criteria, and the weighting of those criteria may change depending on the company's current needs. So I may have a vendor that's my low price, high quality vendor that I use most of the time, but I might find myself with some unanticipated demand and a crunch to get more raw materials in, so I may turn to a slightly higher priced supplier that can guarantee me quicker delivery and still with okay quality, or even the same quality. So you're going to have different sets of vendors that meet different criteria, and you pick and choose from them depending on what you need to do. And I might, even if I have good inventory planning, I may occasionally select that higher priced, faster vendor and make a purchase order with them, even if I don't need to, just to maintain the relationship and make sure they're going to be willing to service my company in the future. All right, number 3. Well, we've placed a purchase order, and so eventually we're going to receive the items. And those could be goods or services from the supplier. And we'll probably get an invoice at some point. And at this point, we'll record the purchase inventory and the AP liability. And finally, we pay the supplier. And we consider the credit terms, and I guess we could say credit and discount terms as part of determining when to make those payments. You know what? I'll go ahead and fix that. Okay, so let's see what this looks like as a series of activity diagrams. Okay, so I'm working in Visio here, and we can look at our basic purchasing activity model. So let's go ahead and insert a text box there, and we'll use that to create our title. And we can center that across the page. Make it a little bit bigger font, since that's a title. And we'll go ahead and underline it. All right, so first off, as with any activity diagram, we're going to have a start event to kick things off. From there, we'll go ahead and set up a sequence flow and create a task or activity, which we will call request prices and availability. And at this time, it's probably a good idea to increase the size of the font. And I could even go in this case, I'll go ahead and change the layout so that we've got a little more professional look to it. All right. So request prices and availability, I'm going to move this a little bit closer over there. All right. Now, and I'll go ahead and make this line a little bit wider. Now, we will have another step, and once I've got one shape working, I generally just copy and paste it. So the next one, we'll place the purchase order. We have another arrow, and I just copied and pasted. So now I've got two, and I'll connect that one to that end and that one to that end. All right, so place purchase order. And let's go ahead and copy both the arrow and the box. Maybe not. Receive items. And I have to tell Visio that I actually want to make a connection here. So once I've done that, it's smart enough to know that I am trying to keep these connected. All right, so I received the items. Now I will actually put in an intermediate event that is a timer. So in this timer, I'm basically going to wait, and I'm going to go ahead and insert a call out. So I've got a little text call out that I'm going to put in here. And I'm going to say wait for optimal payment time. So that could be during the discount phase. It could be when we actually have cash to make the payment. So it just depends. And then I can adjust that. Wait for optimal payment time. I could make another note here, and I'll just copy and paste since I already have a note. And in this case, I'm going to make my note say, once I disconnect it from this timer, I want my note to say here, record purchase in GL. So that this is where the purchase actually gets recorded to the GL. And now here I'm not actually receiving the items again. I'm going to send payment. And here I can record payment in GL. So if you think about those journal entries we were looking at before, we just had the two key journal entries, and that took care of our actual debits and credits. And these are the two activities where that takes place. And then I'll have my end event to go ahead and wrap things up. Create another arrow, line those up. And then once I've got everything, I can actually line them all up basically just by going here and saying auto align in space. And then I can move my text. Okay, so now I've got myself a nice little basic activity model with my wait for the optimal payment time built into the process. Now we've seen some activity diagrams, activity models that show the different pools for the company of interest and the external entity, the business partner, if you will, the supplier or the customer. And these can be shown a number of different ways. And one, if we're looking at just what the messaging or the choreography is between the two firms, well, we've got a special type of collaboration model that we can look at that just focuses on those. And in that case, maybe just a vertical swim lane. You can do this horizontally as well, or pool. Vertical pool. And you can see here my artistic talents are not fantastic. So here we've got our company, and we've got a supplier. The way this one works, we're not even going to worry about the activities taking place for the supplier or for our company. So in this model, we're not really even interested so much in what's taking place in the pools, but we're looking at what's going back and forth between us and the business partner. So here we've got request for prices, quotes, availability, etc. And then eventually the supplier will send that back to us. Prices, availability. And then at some point we will send a purchase order to them. And after they've received and processed the purchase order, they will send goods, basically the items purchased. And then we send payment to them. All right, so this particular type of collaboration model focuses only on the choreography between our company and the business partner, the supplier in this particular case. Now, you won't see this one used too often because you can get the same thing out of a full-blown pool and swim lane approach with all the activities in our company. And, depending on the needs, you may put activities in the business partner pool as well. All right, so we'll take a look at that next. All right, so let's take a look at how we can build a collaboration activity diagram with full pools and swim lanes and the activities themselves. So we'll first start by actually adding a pool, and we'll call this our company. Okay. And now one nice thing about a tool like Visio, and there's a sampling of other tools that you might want to use under Blackboard, under resources. Now I can just say, click on this. Now I can click on this and say, insert a new pool or lane. And this is our company. And so let's say the first pool is the buyer for purchasing. Now we have receiving. And then we can have another functional area called accounts payable. Then of course we've got another pool up here that is the business partner. So this will be our vendor or supplier. Okay. Now remember, we're not too concerned about what our vendor or supplier is doing, so it's not necessary for us to put those activities in that pool. But we'll go ahead and start with our start event here. So purchasing, and we can even put a little note in that says that we are getting a purchase requisition. Receive purchase requisition. So from there, we're going to place an order. And we'll go ahead and make that a little bit bigger. And now we've got a message flow from our activity to the business partner. And we'll call this message flow purchase order. Now they are going to send the goods to us. And we'll put some sequence lines in there, make them nice and wide so we can see them. So, place the order. The next step is we're going to receive the goods. But that doesn't take place in purchasing, that takes place down in receiving. So we will have our vendor, our business partner, send the items back to us. And because this doesn't actually allow me to keep the messages up here, I'll just put a little text box in here. All right. And from our perspective, that's going to come off place order. And now we receive items. And then we've got another step. We need to check items. So QA check, quality check on the items. Now, at this point, we may have items that we don't want. So we could put an intermediate event in here that is an exception. So we'll put an intermediate error event in here, and I'm just going to stick it right here. And if we have that error, then we send the items back. Okay. So we have an error event here that we've just added. All right, so we've got an error event that we've just added to our QA check. So you can see you can actually stick a little arrow on the corner of a process here. Now, if we were to blow up that process, the QA check, we could actually expand that into more detail. But for now, we'll just send that back if we have bad quality. And then that bad quality exception basically ends our process. So we could put an end event right here, just connecting that bad quality exception. But for the most part, we're going to have goods that pass our QA check. So we'll place them in inventory. And then we're going to notify accounts payable that it's time to pay, or that it's time for them to consider payment. And what they're going to do is they're going to wait for payment terms. Whatever those happen to be. Could be 30 days, could be the middle of the month, the end of the month, could be whatever our payment terms happen to be, could be the discount period. So we're taking out of inventory, or placing the goods in inventory, sending that notification to accounts payable, notifying them, and then eventually they will send payment to the supplier. And then our process ends. All right, so there's our place order. Send a purchase order to our vendor, receive the items from the vendor, and if the items don't pass the QA check, well, we send them back to the vendor. That's the returns, and that's going to be an exception. We won't always have returns going back. Then we place the goods in inventory. Accounts payable is going to wait based on the payment terms and send the payment in at the appropriate time.